Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine a world where the problems that keep scientists and engineers up at night, discovering life-saving drugs, finding brand new materials, optimizing massive energy grids, problems that would take today's best supercomputers, maybe millennia to solve. Imagine them being solved in seconds. That future isn't just science fiction. It's being built right now, and one of the key architects is a company called Rigetti Computing. Today, we're exploring Rigetti. Can they turn these incredible, ambitious visions into a real revenue-generating business? Can they actually secure a leading spot in this quantum race? Our mission here is simple: to cut through the noise, give you the vital insights, the key facts, everything you need to get a clear picture of this potentially pivotal company. We're going to unpack what makes Rigetti tick.
And when you're dealing with something as, well, fundamentally complex as quantum computing, the leadership is just as important as the qubits themselves. What really strikes me about Rigetti is the blend they have at the top. You see deep scientific expertise combined with some serious business experience. That mix is, frankly, essential to navigate this kind of frontier technology.
You're absolutely right. The team they've assembled is quite impressive. Let's start with Dr. Subodh Kulkarni. He came aboard as president and CEO back in December 2022. He brings, over 30 years from the semiconductor world. That's incredibly relevant experience for building the actual hardware. And his track record, well, look at CyberOptics. He was CEO there from 2014 until they were acquired in 2022. He really drove growth in high-precision sensors, proving he can scale advanced tech into real business. Since joining Rigetti, you can see his fingerprints on key strategic moves, that big partnership with Quantum Computer, for example, and the constant push to scale up their systems, like launching the 84-qubit Anka-3 late last year.
And his background at giants like IBM and 3M, that definitely seems to inform their strategy of integrating quantum with classical computing. That hybrid approach is seen by many as, well, the most practical path forward right now. And that integration piece is critical to their whole full-stack approach. David Rivas, the CTO since February 2023, is central here. He was already SVP of Systems and Services since 2019, so he knows the ropes. His background includes Sun Microsystems, Nokia. He's been instrumental in pushing their hardware forward. He led the development of that Anka-class architecture, and that architecture delivered a big jump in gate fidelity. Think of fidelity as just accuracy. How reliably can you perform an operation on a qubit? Getting that 2-qubit gate fidelity up to 99.5% on Anka-3 is a really significant technical win. Fewer errors mean more reliable results.
Absolutely. And underpinning all that R&D is the financial side. Jeffrey Bertelsen took over as CFO, also in February 2023. With 25 years in finance, including time as CFO and COO at CyberOptics with Kulkarni, plus experience at KPMG, well, he brings that crucial financial discipline. It's vital when your R&D costs are as high as they are in quantum.
It really highlights that balance, doesn't it? Pushing the scientific boundaries while keeping the financial ship steady. That's where someone like Andrew Bestwick, the SVP of Quantum Systems since January 24, fits in. He's got the deep physics background of PhD from Stanford, and he's been with Rigetti since 2015, driving things like their multi-chip architecture. But crucially, he also spent time at Bain & Company. That brings a strategic business lens to product development.
Right, bridging the gap between lab research and market reality.
Exactly. And we shouldn't forget Jackie Kowick, the SVP of HR. Over 20 years in tech and finance HR, her job is attracting and keeping those top-tier quantum physicists and engineers. That talent is maybe the scarcest resource in this whole industry.
So when you put all these pieces together, this leadership team, Kulkarni driving government contracts, Rivas focusing on scalable hardware, they seem very deliberately steering Rigetti towards a leadership position, focusing on both the core tech and the partnerships needed to bring it to market.
It's also interesting to look at the leadership evolution. The company was founder-led. Dr. Chad Rigetti, who came from IBM's Quantum Group, founded it in 2013. But he stepped down as CEO in 2022 to focus on product and tech, and then left entirely by early 2023. That transition definitely caused some chatter among observers and investors.
Yes, his exit did raise some eyebrows, didn't it? You saw discussions online, concerns about the original vision, potential risks. But the counterpoint is Kulkarni. While it's no longer founder-led, Kulkarni has specific, proven experience in scaling tech companies. That's arguably exactly what Rigetti needs in this phase, moving from the initial vision to broader execution. It suggests a shift towards perhaps more pragmatic growth.
And that brings up the question of incentives. How do you motivate leaders in a field where breakthroughs take years and profits might be even further out?
Aligning their interests with shareholders is absolutely key. We don't have the absolute final details from the 2025 proxy yet, but standard practice for public tech firms suggests a mix. Salary, yes, but also significant stock options and performance bonuses tied to hitting critical milestones, both technical and eventually commercial.
You can see signs of this alignment. That recent $350 million at the market equity offering they completed in June, plus a market cap sitting around $4.34 billion. It strongly suggests executives hold substantial equity. Their financial success becomes directly tied to the company's long-term value creation, which should align their goals with yours as an individual shareholder. It incentivizes that long view.
Compared to peers like IonQ or D-Wave, Rigetti's structure seems geared towards rewarding those crucial technological steps forward alongside eventual revenue growth. High R&D costs mean short-term profit isn't the main focus right now, clearly. But this alignment encourages building lasting value even if there are risks, if those milestones aren't met on schedule. It's about betting on the future together.
Beyond the people and the paychecks, though, what's the driving philosophy here? Rigetti's mission statement is bold, to say the least. To build the world's most powerful computers to help solve humanity's most important and pressing problems.
No, well, that's aiming high. It certainly fuels their vision.
And that vision is about quantum computers actually outperforming classical ones in really critical areas. Drug discovery, imagine finding new cures exponentially faster. Climate modeling, getting much clearer predictions to help us tackle environmental issues. Or financial optimization, finding efficiencies, detecting fraud in ways current systems just can't. They're not just building machines for the sake of it, they're aiming for tangible, world-altering impact. And the culture seems built around enabling that. It sounds like deep collaboration is key: scientists, engineers, strategists, all working together. You see it in practice with things like the HSBC collaboration on fraud detection. That's a real-world test case. Plus, their open modular system architecture that suggests a culture of adaptability, of inviting others to build on their platform. It's all geared towards that ultimate prize: fault-tolerant quantum computing. Machines reliable enough for the really big, complex jobs.
Right. So let's try to simplify the business model. Quantum computing sounds incredibly complex, and technically it is, but the core business idea, it's actually pretty straightforward. Rigetti designs and builds these advanced quantum computers. Then, primarily, they offer access to that computing power over the cloud.
So it's almost like renting time on a super specialized supercomputer via the internet. Instead of buying this massive quantum machine yourself, you access it as a service. You pay for the quantum processing time you need to tackle problems that are just too hard for regular computers, optimizing financial portfolios, maybe, or simulating molecules for drug development. It makes this cutting-edge power accessible.
Exactly. And while the technical details, superconducting qubits, quantum error correction can get pretty deep, Rigetti seems focused on delivering practical solutions through partnerships. That makes their value proposition much clearer for potential customers. It's about bridging that gap between the physics lab and real-world business problems.
Okay, so what specifically are their main offerings right now? How do they generate revenue or plan to?
Their main service is quantum computing as a service, QCaaS. Customers can access their machines, like that 84-qubit Anka-3 system, either directly through Rigetti's own quantum cloud services, QCS platform, or via big cloud providers like AWS Bracket. This targets the enterprises, the government labs, the researchers who need that heavy-duty quantum processing power.
And besides cloud access.
They also sell the Novera QPU. That's a smaller 9-qubit quantum processing unit sold directly to research institutions. It allows those labs to have a dedicated quantum chip on site for deeper hands-on experimentation.
And you mentioned the Anka-3 system, launched late 2024. That 82-qubit machine with the high-fidelity 99.9% single-qubit, 98.6% two-qubit gate fidelity. That sounds like a major technical milestone for them.
It absolutely is. Those fidelity numbers are crucial benchmarks in the field. They represent real progress towards reliable quantum computation. Now, we have to be realistic. The whole quantum computing industry is still mostly in the R&D and early adoption phase. There isn't broad product market fit across many industries yet. But Rigetti is showing early traction. That HSBC collaboration for fraud detection is one example. Developing quantum algorithms for power grid optimization is another. These point towards potential future markets.
And their roadmap. What's next?
They're signaling continuous development. Plans include scaling up to a much larger 336-qubit system, codenamed Lyra, though there's no firm timeline on that yet, They're also upgrading the system they host for the UK's National Quantum Computing Centre, taking it from 24 to 36 qubits. It shows that constant push for more power and capability.
So what really makes Rigetti different from, say, an IBM or an IonQ? What's their unique angle?
I'd say the core differentiator is their full-stack strategy. They don't just do hardware or software. They integrate the whole chain: chip design, manufacturing, and cloud delivery. And critically, they do the manufacturing themselves at their Fab 1 facility in Fremont, California. That's the first dedicated quantum device manufacturing plant. That in-house control is pretty unique.
Owning the factory gives them control. How does that translate strategically?
It connects directly to their mission of solving complex problems and potentially leading the superconducting quantum computing space. It fuels their ability to iterate quickly, design a chip, build it, test it via the cloud, get feedback, tweak the design, build the next version all in-house. This vertical integration is also attractive for government contracts and big strategic partnerships, like the one with Quanta Computer. Remember, Quanta is committing over $100 million alongside Rigetti over 5 years to commercialize these systems. That tight control over the process is a key enabler. It potentially offers speed and innovation advantages over competitors relying on external foundries.
Their journey since 2013 shows that persistence. 2016, they had a 3-qubit chip, very early days. 2017, 8 qubits, and significant funding from names like Andreessen Horowitz. Then 2022 was big, launching a 32-qubit system in the UK, going public via SPAC. 2024 brought the 84-qubit Anka systems with those improved fidelities. And just this year, 2025, securing those DARPA, AFO-SR, and Innovate UK awards really reinforces their R&D leadership, especially in government-backed projects.
It really does, and it shows their adaptability, too. They embraced the hybrid quantum classical approach early, which is now pretty standard. They've expanded internationally with footholds in the UK and Australia. They seem willing to evolve as the landscape shifts.
Let's talk about where they actually operate. Headquarters in Berkeley, California, R&D, admin. But the star is really Fab 1 in Fremont, their wholly owned quantum chip factory. Then there's the UK presence, hosting that system at the National Quantum Computing Centre's Harwell campus, with the upgrade planned. Australia seems more focused on research collaborations for now.
And owning Fab 1, that vertical integration, is worth emphasizing again. It gives them direct control over producing their superconducting chips. Less reliance on external suppliers means potentially lower costs down the road, better quality control, and faster design iterations. Take their proprietary alternating bias-assisted annealing technique, ABA. Think of it as a specialized manufacturing process aimed at creating better, more uniform qubits by carefully controlling the material properties during fabrication. That's something they can fine-tune in-house. A competitor relying on a generic foundry might not have that level of process control. Of course, running your own advanced fab is also incredibly capital intensive. It's a big bet.
So how do they get this quantum power to users? What's the distribution model look like?
It's essentially a dual approach. The main focus is QCaaS quantum computing as a service, delivering access through their own QCS platform and through major cloud partners like AWS Bracket and Microsoft Azure broadens their reach significantly. But they also do direct hardware sales of the Novera QPU to research labs that want their own dedicated chip for deeper experimentation.
So cloud for broad access, direct sales for specialized research needs.
Exactly. It supports scalability. Partnering with platforms like AWS also makes it easier for customers to get started. Integrating quantum access into cloud environments they already use, it lowers the barrier to entry.
Okay, but here's the crucial part for investors. Revenue predictability. How stable is their income right now?
Honestly, it's currently quite unpredictable. We saw that Q1 2025 revenue was $1.5 million, which was actually down significantly, over 50%, from the $3.1 million in Q1 2024. That volatility is typical for this stage.
And where is that revenue coming from?
A lot of it is project-based government contracts, things like that $5.48 million AFSR award or the £3.5 million Innovate UK grant. These are absolutely vital for funding R&D, but they aren't steady, recurring revenue streams. QCaaS subscriptions and Avera sales could provide recurring revenue eventually, but the base is still very small. Long-term deals like the Quanta Computer partnership might improve predictability as commercial quantum applications start to emerge, but we're not there yet. That's still on the horizon.
Right. So in this very competitive, very young market, what gives Rigetti an edge? Is it sustainable? First off, they don't have a monopoly, do they?
No, absolutely not. It's a crowded field. You've got IBM, Google, IonQ, Quantinuum, all serious players. But Rigetti does have a strong position, particularly in superconducting quantum computing. They have that portfolio of over 150 patents, which is significant IP. And those government contracts and exclusive partnerships, like with the UK's NQCC, create real barriers to entry for newcomers.
What about economies of scale? Are they seeing that yet?
Not in a major way like a mature manufacturer would. They're still early stage. But that in-house Fab 1 facility holds the potential for future economies of scale. As they ramp up production, their per-unit chip costs could potentially drop, giving them an advantage over competitors relying solely on external foundries. It's a long-term play on efficiency.
And network effects. Could their cloud platform become more valuable as more people use it?
It's definitely a possibility. As more users build applications and tools on Rigetti systems, the platform itself becomes more valuable, attracting even more users. Think about integrations like the one with QCTRL's software enhancing performance that draws people in. These effects aren't as strong yet as, say, a social media platform, but it's a potential long-term advantage that could create stickiness.
How do they stand out strategically from the competition?
Their focus on superconducting qubits combined with a hybrid quantum classical approach is one key differentiator. IonQ uses trapped ions, Xanadu uses photonics. Rigetti is firmly in the superconducting camp. Also, their multi-chip architecture, like in UNCA-3, is a distinct approach to scalability compared to trying to build one single massive chip. It potentially offers a more manageable path to larger qubit counts.
Are customers locked in once they start using Rigetti? What about switching costs?
They're moderate, I'd say. If you develop software heavily optimized for Rigetti's specific architecture on their QCaaS platform, porting it to a different quantum computer using a different technology might require significant rework. The lock-in is probably stronger for institutions that buy and integrate a Novera QPU directly into their lab setup. Switching that out is a bigger undertaking.
And brand recognition. They're not exactly Google or IBM in terms of name recognition.
No, not for the general public. But within the specialized quantum computing community, the researchers, the government agencies, the potential enterprise users, they have strong brand recognition. Those high-profile partnerships and government contracts carry a lot of weight in this niche but very important sector.
Let's talk about their proprietary resources. You mentioned patents, but what else?
Well, beyond the 150-plus patents, that ABAA fabrication technology is a key proprietary asset, potentially hard to replicate. And critically, their human capital's the team of experts like Andrew Bestwick. Attracting and retaining that top-tier quantum talent is a massive competitive advantage in itself, given how scarce it is.
And that ABAA technique that ties into their process power.
Exactly. That fabrication technique, funded partly by that AFO-SR award, aims to improve qubit quality and reduce defects during manufacturing. If successful, it could give them a significant cost and performance edge. It's a unique process developed in-house, difficult for others to copy without serious R&D investment.
What about their technological leadership overall? Are they ahead of the curve?
They demonstrate leadership with things like their multi-chip processors and their work on scalable quantum error correction codes. UNCA-3's high fidelity is evidence of their technical prowess. Now, competitors are moving fast too, so it's a constant race. But Rigetti shows agility. Look at their collaboration with quantum machines using AI for faster, better calibration of their systems. They seem quick to adopt new tools to stay competitive.
Does being an early entrant, launching that first processor back in 2016, give them a lasting advantage?
It certainly helped them secure early funding and crucial partnerships. Being first mattered then. But the industry is still so young that timing remains critical. The race isn't over. Breakthrough innovation from anyone could reshape the field quickly. So that early start was good, but sustained innovation is what counts now.
Okay, so these advantages, patents, Fab 1, partnerships, talent, how durable are they? What could weaken their position?
They seem reasonably sustainable if Rigetti continues to lead technologically and if they keep securing the necessary funding. That recent $350 million equity raise and the Quanta investment are huge boosts for financial stability, which directly supports maintaining those advantages.
But the vulnerabilities?
Oh, they're real. New entrants with disruptive tech could emerge. A major competitor like IBM or Google could achieve a decisive breakthrough, true quantum advantage on a key commercial problem that Rigetti can't match quickly. There's also the risk of a technological shift away from superconducting qubits, maybe towards topological qubits or something else. And of course, funding constraints are always a potential risk in such a capital-intensive field. The landscape can change fast.
So looking ahead, what's Rigetti's strategy for growth? What are the main pillars?
It looks like a multi-pronged approach. First, market penetration, getting more users onto their QCaaS platform, especially via cloud partners like AWS Bracket. Second, product development, scaling up those qubit counts like the planned 396 qubit Lyra system, and constantly improving fidelity. That technical race never stops. Third, market development, targeting specific high-value industries through partnerships, like the HSBC deal for finance, finding those initial killer apps. And fourth, leveraging those strategic collaborations with Quanta, with government agencies to accelerate commercialization and build credibility.
What's the potential size of this market they're chasing?
The projections are exciting, though still speculative. The quantum computing market is forecast to hit maybe $1 to $2 billion annually by 2030. Looking further out, the total addressable market, the TAM, across all potential industries could grow to $10 billion by 2035. Rigetti's focus on scalable systems and applications in finance, pharma, energy that positions them to grab a share of that potential growth, especially using their hybrid quantum classical approach for near-term problems.
Can you give us some more concrete examples of where this technology could be applied?
Sure. We mentioned finance fraud detection with HSBC. Think about energy optimization algorithms for managing power grids more efficiently, reducing waste, preventing blackouts. In pharmaceuticals, simulating molecular interactions for drug discovery, drastically speeding up the search for new medicines. These are complex, high-value problems where quantum holds real promise. The diversity of applications is key to its potential scale.
How resilient are their operations? What about their supply chain and customer base?
Their supply chain, mostly for chip components and data center gear, doesn't seem overly reliant on single suppliers, though specifics aren't public. But crucially, owning Fab 1 greatly reduces their dependence on external chip manufacturers. That's a big resilience factor right there.
And customer diversity.
That looks pretty strong. They have government agencies like DARPA and AFOSR, research institutions like the NQCC in the UK, and major enterprises like HSBC and Quanta Computer. Having that mix is important. It means they aren't overly reliant on any one sector. If, say, enterprise spending slows down, the government contracts provide a buffer. That diversification helps mitigate risk. Fundamentally, Rigetti is riding a major secular trend. Quantum computing isn't a fad. It has the potential to be relevant for decades because it offers a fundamentally different way to compute. Their focus on scalable systems positions them well to capitalize on this trend. If they keep hitting technical milestones, their chance of sustained relevance seems high, maybe an 80% probability, though that's just an estimate. Government funding provides a stable R&D base, which helps weather market storms.
So summarizing the growth drivers, it's technology advancement, fidelity, scale, strategic partnerships like Quanta, and government contracts providing that R&D fuel.
Correct. But we also need to constantly keep the main risks in view.
Which are?
Intense competition from tech giants and other quantum specialists, significant remaining technological hurdles, especially achieving true fault tolerance, and that ongoing dependence on external funding to fuel the very high R&D burn rate. These are the major headwinds.
Okay, let's pivot to the financials. What does Rigetti's current performance tell us? Q1 2025 seems to be the latest data point.
Right, and the numbers really paint a picture of an early-stage company in a high investment phase. It's crucial to interpret them in that context.
So the key figures for Q1 2025.
Revenue was $1.5 million. That's down significantly, 52.5%, compared to $3.1 million in Q1 2024. Operating expenses were up 22%, reaching $22.1 million. That resulted in an operating loss widening to $21.6 million for the quarter. Now, they reported a net income of $42.6 million, but that included a $62.1 million non-cash gain. So operationally, they're still losing money.
What about cash? That's critical for a company losing money operationally.
Very critical. As of March 34, 2025, they had $209.1 million in cash and investments. That jumped to $237.7 million by April 30. Thanks largely to that big $350 million equity offering they completed. That significantly extends their runway.
Gross margin.
That declined too, from 49% in Q1 2024 down to 30% in Q1 2025.
Okay, let's interpret these for the individual investor. The revenue drop.
It likely reflects the lumpy nature of project-based government contracts, which also tend to have lower margins. They're prioritizing R&D breakthroughs over maximizing near-term high-margin sales right now. The 30% gross margin shows it's still expensive to deliver these services at this stage, partly due to those lower margin contracts and just the inherent cost of operating this cutting-edge tech. And the $21.6 million operating loss just hammers home the heavy investment needed to scale quantum tech.
How does this stack up against common tech metrics like the Rule of 40 or ROIC?
Well, with negative revenue growth and negative operating margins, they fall well short of the Rule of 40 benchmark. That signals they're still very much in the development phase, searching for wider product market fit. And return on invested capital, ROIC, is undoubtedly negative given the negative earnings and high capex. They are investing heavily for the future, not generating returns now. That's the nature of the beast in this sector.
But the cash position looks much stronger after that equity offering.
Absolutely. That $237.7 million provides a solid buffer. And while we don't have detailed debt figures, relying on equity offerings suggests they're keeping leverage low, which is generally prudent at this stage. Free cash flow, as you'd expect, remains negative due to the heavy R&D spend.
Beyond the dollars and cents, though, those technical metrics, qubit count, fidelity, are key progress indicators in this industry, right?
Critically important. The 84 qubits in Anka 3, that 99.5% 2-qubit fidelity, these show tangible technical progress. They demonstrate Rigetti is advancing the core technology, even if it's not immediately showing up in the revenue line. That's what keeps investors interested in the long-term potential.
How do they compare financially to a peer like IonQ?
Well, IonQ reported a higher revenue in Q1 2025, $7.6 million, versus Rigetti's $1.5 million.
Yeah.
So IonQ seems to have more commercial traction currently. However, Rigetti's steady stream of government contracts provides a unique funding base for R&D that IonQ might not have to the same extent. The overall trend for Rigetti declining revenue, rising OpEx, clearly points to that strategic focus on long-term development. But the recent funding significantly shores up their financial stability.
Okay, let's talk valuation. As of early July 2025, the stock was around $13.45, giving it a market cap of about $4.34 billion. How should we think about that number?
Valuation is incredibly important here, especially for you as an individual investor in such a speculative field. The idea of a margin of safety comes into play. Estimating the true intrinsic value of a company like Rigetti, with negative earnings and uncertain future growth, is extremely difficult. Paying a lower price relative to that uncertain future potential gives you a buffer against the inevitable volatility. It's about managing risk.
Right. Is that $4.34 billion market cap reflecting genuine future prospects, or is it inflated by hype? That's the key question, given the current lack of profits.
Exactly. And traditional valuation methods don't help much here. Price to earnings is useless with negative earnings.
So people look at price to sales.
They do for early-stage growth companies.
Yeah.
If you take the $4.34 billion market cap and estimate annual revenue around $6 million based on Q1, you get a PS ratio of roughly 723.
Wow, 723. That's high.
Extremely high. But frankly, it's typical for quantum computing stocks right now. The valuation reflects massive expectations for future growth and market disruption, not current performance. It's pricing in the potential decades ahead.
What about other methods? DCF, comparing to peers.
Discounted cash flow is tough because predicting future cash flows is highly speculative. Long term, if quantum really takes off, maybe you could justify it, but the assumptions are huge. Comparing to peers, IonQ's PS ratio is around 50. Rigetti's 723 is significantly higher. That could suggest overvaluation unless their growth accelerates dramatically or their technology proves significantly superior long term.
So what are the competing stories here? The bull versus the bear case for Rigetti.
The bear case, often from institutional analysts, points to the obvious.
Yeah.
Low revenue, Model 5M, high losses, 21/6 and flat loss, the market's immaturity, and fierce competition from giants like IBM and Google.
And individual investors, what are their worries?
There were those past concerns about the founder's exit. More currently, it's the extreme stock volatility, that huge swing from 66 cents to over $21 in the past year, and the simple fact that profitability seems a long way off. It requires patience and a strong stomach for risk.
But the bull case has strong points, too.
Definitely. You have analysts like Cantor Fitzgerald initiating with an overweight rating and a $15 target, citing quantum's strategic importance. And crucially, that recent $350 million equity offering and the $35 million investment from Quanta are powerful votes of confidence from the market and strategic partners. That's real money backing their approach.
And individual investor sentiment seems quite positive lately.
Yes, recent online discussions show a lot of enthusiasm. People point to that huge 1,200% rally off the lows, technical chart breakout suggesting momentum, there's excitement around the government contracts providing a foundation, and the steady drumbeat of technical progress like Anka 3. The narrative is often about getting in early on a potential revolution.
So weighing both sides, what's the most likely path forward here, and how does that $13.45 valuation look?
Given the recent funding and technological progress, the bull case seems perhaps slightly more probable right now, but that has to be balanced against the current lack of revenue. So the current stock price is clearly reflecting optimism about the future, not the present financials. Is it discounted? At $13.45, with analyst targets averaging around $14.20, roughly 8.5% upside. Maybe it's fairly valued or slightly undervalued if you fully believe in that massive long-term potential. But that extremely high PS ratio and the negative earnings mean you need to be cautious. The price assumes enormous success in a field still under heavy development. It's a bet on the come.
Let's catch up on the latest news. What are the recent events shaping the story around Rigetti?
A big one was completing that $350 million at the market equity offering on June 11th, 2025. That really strengthened their balance sheet.
Before that, May 12th, they reported those Q1 results we discussed, the $1.5 million revenue and that $42.6 million net income number that needs context due to the non-cash gain.
Right. And late April, April 29th, they closed the $35 million investment from Quanta Computer, cementing that key strategic partnership. Also in April, they announced securing those significant DARPA, AFOSR, and Innovate UK awards, highlighting continued government support for their R&D.
What should investors be watching for next? What are the key milestones on the horizon?
Definitely updates on the development of the next-gen Lyra system. Any progress reports on quantum error correction, that's crucial for reliability. And announcements of any new major strategic partnerships or significant customer wins. CEO Kulkarni also spoke at the Needham conference back on May 9th, likely giving more color on strategy, so keeping an eye on executive communications is useful too.
And the general buzz among investors. You mentioned it's been mostly positive recently.
Yes, looking at discussions from early June to early July 2025, the sentiment seems quite bullish. That Cantor Fitzgerald overweight rating got a lot of attention and boosted optimism.
And the stock's big run-up.
That 1,200% rally from the lows is definitely a major topic, with many seeing technical strength and momentum. That said, you do see some cautious voices advising awareness of the volatility, maybe suggesting waiting for a pullback before jumping in. It's not universal euphoria.
So the overall narrative seems to be optimism about the tech and the funding, but with an understanding that it's still a speculative high-risk play.
That sums it up well. Cautious optimism, perhaps.
Which brings us right back to our core question. Will these big deals, Rigetti has landed the government contracts, the Quanta partnership, actually translate into stable revenue and put them in pole position in the quantum race?
Okay, let's tackle that directly. The deals are substantial. Government funding from DARPA, $1 in dollars, AFOSR, $5.48 DEMPAs, Innovate UK, £3 5M, plus the Quanta collaboration, $35 invested, over $100 committed.
Yeah.
This funding is absolutely vital. It fuels the R&D needed to scale up systems like Lyra, no question about that.
But does funding equal stable revenue?
Not yet. That Q1 revenue of $1.5 million, down year over year, tells us these deals haven't translated into predictable, recurring commercial income at this point. Most of that money supports research and building capability, not selling ongoing services at scale. Broad commercial quantum applications just aren't widespread enough yet for that kind of revenue stability.
And pole position, are they leading the pack?
They are definitely a strong contender. Their leadership in superconducting qubits, the high-fidelity systems, the 150-plus patents, these are significant strengths. But IBM, Google, IonQ, Quantinuum, they're formidable competitors, also advancing rapidly, often with deeper pockets. Reaching true pole position means more than just good tech specs. It means demonstrating clear quantum advantage on commercially relevant problems and signing large-scale, long-term commercial contracts. Rigetti isn't there yet. Those crucial steps are still uncertain in the near term. It's still very much a race in progress.
So pulling it all together, my take is this. The deals are crucial for survival and development, providing credibility and vital cash. But stable, significant revenue, that seems unlikely in the immediate future given how early the industry is. Rigetti is a strong player, a leader in their niche of superconducting quantum, absolutely, but definitive pole position, not yet secured. The competition and technical hurdles are still immense. For you, the individual investor, this really looks like a long-term proposition. It's a bet on the potential of quantum computing over the next decade or more, not on near-term profits.
I think that's a fair assessment, and it highlights something important: asymmetric information. Some of Rigetti's core strengths, like that multi-chip architecture or the details of their ABA fabrication process, are deep technical advantages. They're hard-to-replicate assets that aren't always obvious from the outside. These underlying technical truths are part of what makes the company compelling, despite the risks and the volatility. It's about looking beyond the surface numbers to the fundamental capabilities being built.
And really, Rigetti's story is a window into the entire quantum computing revolution. It's about more than just technology. It's about immense ambition, significant risk, and the potential to fundamentally change how we solve the world's biggest problems. As you think about this, consider the sheer scale of the shift quantum advantage could bring, not just transforming industries, but maybe altering the very nature of discovery and innovation. It's a future that could unlock answers to questions we haven't even thought to ask yet. We encourage you to keep exploring this dynamic field. Staying informed about these fundamental technological shifts isn't just interesting, it's becoming key to understanding the markets and the world of tomorrow.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.